Why budgeting matters for SMEs? Do you know if your business is overspending or on track this month? One of our clients, a growing F&B chain in KL, used to manage budgets in Excel, but they could never compare actual versus budget fast enough until they started using Xero's budget tracking features. In this video, I'll show you how to set up budgets, monitor performance, and run variance analysis in Xero, tailored for Malaysian SMEs. Why use Xero for budgeting? Budgets aren't just for corporates. SMEs need them too. Cash flow control, profit forecasting, and accountability. In Xero, you can create budgets by month, compare with actuals, and even export to Excel for detailed planning. So let's get started now. Section 1. Setting up your first budget. So go to Accounting, click on Reports, choose Budget Manager. So you can use either overall budget or you can click on Add a new budget here. Choose your own name, and if you have set up tracking category earlier, you actually can select from here. So once you're done, you just save, and then you can start from which month and year under this box. Best to use the first month of your financial year. And in terms of the actual, it will show the actual numbers either none, 3 months, 6 months, or 12 months. And lastly, to choose the period, best to use 12 months period. Once it's done, you click on Update. And then you need to input the first month's amount manually. So for example, this under sales, your budgeted amount for sales is 100,000. And you have another sales-service income account. Your budgeted amount is actually 150,000. So once you set up the first month amount, and then in the second month onwards, there are 3 methods for you to build your budget by clicking on this green arrow. So you can choose either you apply the fixed amount to each month for this amount, or you can adjust by amount each month. For example, you want to increase 10,000 a month, or you can adjust by percentage each month. For example, 10% increase each month. So once you're done, you just click on apply, and you will see it will add up 10% based on the previous month's number. And then you may continue to insert all the numbers for the rest of your accounts in your cost of sales, operating expenses. So once it's confirmed, you just click on save. So the tip for you is you use your prior year actuals as a base for budgeting, and then tweak based on the growth expectations. So this is how you build your budget in Xero. Let's move to the next section. In section 2, we'll talk about running variance analysis report. So once you have added the actual amount through data entry, it's time to see how you're performing against the budget. So again, you can click on Accounting and click on Reports. Then you can choose a budget variance report here. So first, you need to select the date range that you want to compare, which budget that you are comparing against. So if you scroll down, you're able to see the actual month. For example, and this is July 2025. And this column will be July 2025 overall budget that you have set earlier. For the column of variance, it is actual minus budget in number. And the variance percentage is the actual minus budget in percentage. If you see in the red, means it is either overspending or underperforming, or it is green, it's always better than budget. So on the left here, it is actual versus budget in the current month. Whereas on the right, it is actual versus budget in year to date. So the interpretation tip for you is if you overspend on marketing but gain higher revenue, the variance isn't always negative. So context matters. That's all for the budget variance report. Let's move on to the next section. In section 3, it is about update budgeting for performance monitoring. So if you want to update the existing budget, you can update your budget by exporting to Excel and re-uploading via CSV. So you can click on the export budget to Excel and then update the new estimates and then re-import into Xero as updated budget version using this import button. So why this matters? Many Malaysian businesses struggle with the rigid budgets. So Xero gives you the flexibility for real-world changes. And I would like to share with you the 3 common mistakes that you can avoid. First, not aligning budget categories to chart of accounts. Second, no clear ownership. No one tracks the actual versus budget. And the third, budgeting once a year and then forgetting it. So to fix this, set a monthly review rhythm with the team leads or partners. And for the best practice for Malaysian SMEs, so you actually can build the budget before your financial year starts and align with your P&L categories, or you can break down into departments using the tracking categories, for example, outlet A or outlet B, so on and so forth. And you can review monthly using the budget variance report. And lastly, adjust the budget every quarter if needed. So as a summary, budgeting isn't just a spreadsheet exercise. It's your roadmap to business success. Use Xero's built-in tools to stay on track month after month. If you like this video, click on like, share, and subscribe button for more Xero tips. And if you need help building your first Xero budget or migrating from Excel, so reach out to us at CALTRiX. We help Malaysian SMEs to build solid financial planning frameworks with Xero. And see you in the next video.